Hello everybody. Hope you're all doing well. And without further ado, let's jump right into it. Glassnode has pointed out a bizarre consistency between the current and the previous Bitcoin cycles in terms of their metrics. A simple moving average, or an SMA, is an analytical tool that produces an average of any given quantity of a specific period of time. As its name implies, it moves along with the quantity and changes its value accordingly. SMAs can be quite useful for studying long-term trends, as they smooth out the curve and filter out any short-term fluctuations in the relevant quantity that have no bearing on the longer trends. As is usually the case with tools like these, an SMA can be taken for any length of time, but a period of fewer than 7 days and 30 days generally find the most use case. So they found a lot of people have been looking through the numbers. This, of course, is going to continue to be a topic until we get past it. If we are currently in the next phase of the Bitcoin bull run, and a lot of people are basically looking at the older charts to see if there are any indications of this happening, simply because historically, nearly all bear markets that we've been in have run the same exact course. I know that sounds kind of weird, and this also leads me to tons of question marks above my head, but it's always generally been the same length of time over the 4-year period. There's a year where prices are down, and that's where the news begins. According to data from on-chain analytics firm Glassnode, Bitcoin has spent 381 days under its 200 daily SMA curve. The 200-day SMA is important for Bitcoin, as both the bear and bull and vice versa transitions have historically taken place with breaks above or below this level. There's a chart for it right there. They talk about the being displayed in the chart in the total 381 days, etc., etc. However, the most interesting of all is that during the current duration, Bitcoin stayed below this level in the cycle for 386 days. Amazingly, this is nearly the exact same 381 days that Bitcoin took to break above the line in the current cycle. This is leading a number of analysts to basically believe that we are out of the bear market woods because we've basically completed the exact same movement that the other bear trends before also completed. Basically, we were down for a certain amount of time. That time was equivalent to where we were in the last cycle and the previous cycle before that. And therefore, you've seen the bullishness floating around within the cryptocurrency space. I told you the next step is to, when you start getting text messages, I was going to say emails, but not really. Basically messages from people who you know, who were into crypto, who want to get back into the game. This is always a very clear indication as to if there's money flowing back in the cryptocurrency space. So yeah. All the analysts are saying the exact same thing. They're not saying that we're going to be at a 195,000 Bitcoin by tomorrow, but apparently now we begin the rise upward. This should take roughly around 10 or 11 months before we get relatively close to where we were before. Then you have Bitcoin's halving, and then yeah, that's how it always works out. That's the Glassnode. Bitcoin 200 SMA was the exact same way as before news. Yeah. Let's move on. Also in popular news, an account by an XRP enthusiast known as W. Kahaman. Okay. Shared the highlights of their latest report that they found on cryptocurrency's prospects within Africa. This is made by the United Nations Development Program team. The United Nations Development Program, UNDP, a UN organization focused on supporting countries and communities in combating poverty, shared there. The name of the paper that they made is called Cryptocurrency in Africa, Alternative Opportunities for Advancing the Sustainable Development Goals. The notable part, or at least the part that kept on floating around in the news, was that XRP and Ripple Inc. were mentioned constantly within the paper. Here's the tweet for it right here. It says, a report this January by the UN, Cryptocurrencies in Africa, speaks of Bitcoin, stable coins generally, smart contracts, including Ether, but has a decent passage noting XRP regarding ex-border, cross-border payments, suggesting derivatives to offset volatility. It says, take a look, and here's the continuation of the tweet right there. Authors of the thesis analyzed use cases for XRP and using the token in payment corridors for low cost and nearly instant remittances. Per the text, XRP can bridge two local fiat currencies in a cost-efficient manner. This was one of the main, and I wonder what the conversations are happening like behind the scenes. We ourselves will never hear about them. We always get this information sometimes years later on, of the private conversations happening behind the scenes, but it's not, how do I say this? When I always say like follow the money or like look at where things are going or look at who's talking about what, it's always the same things that keep popping up over and over. I don't think it's weird that the UN is talking about Bitcoin or Ether or using smart contracts or trying to develop extra infrastructure within Africa using cryptocurrencies or blockchain, or that wing, they also just happen to mention Ripple and XRP, who for the longest amount of time until the SEC basically knocked them in the face, were kind of the poster childs for regulations around the world and using cryptocurrencies as a means of payment, and also being able to send money quickly around the world with little to no friction, as many places within Africa have an issue where a lot of people are still forced to use MoneyGram and Western Union, who take gigantic 15, 20, 25% fees sometimes. So if you can have that 25% fee knocked down to 1/10 of 1 cent, it makes sense. So I always wonder personally, like what the connections are. Like who in the UN knows someone in Ripple, who, put their name forth for the discussion, who was looking into what, and why this paper is basically just mainly mentioning 3 coins. Stable coins are also going to be a humongous topic over the course of this year, as a lot of countries are once again, if you look it up, they're preparing to all launch their central bank digital currencies over the course of this year. So, of course, stable coins also made it in there as well. That's the Ripple, Ethereum, Bitcoin, XRP were mentioned in a paper by the UN. And yeah, let's move on. Also in the news, Tokyo Electric Power, or Tepco, Japan's biggest power provider, has explained how it is planning to make use of surplus renewable energy to power its Bitcoin and altcoin mining operations. You may be shocked at this, probably not. If you've been here for a while, we saw since 2019, a number of companies are no longer terrified to announce that they're actually getting into Bitcoin or cryptocurrencies in some sort of way. Usually, one of the ways that we kept on hearing about it was that any company who was dealing in hydroelectricity, in solar power, or whatever other renewable source of energy that there might have been, that they were all looking to use their surplus energy in some sort of way because they had too much of it. And it almost always came down to the exact same thing. They were trying to mine Bitcoin and Ether. Every single time. Tepco first unveiled its mining plans late last year, providing a boost to local crypto markets, but it appears to have been working on related projects for several years. Of course, back in June of 2020, the firm said it was partnering with trading company Itochu to co-build a blockchain-based surplus power trading platform. Not really even much more to read here. It's kind of the same exact trend that we've been seeing before. This is why I always mentioned and still mention it is abundantly clear that nearly everyone is in crypto. Every time, except for Munger and except for Buffett. These are the only 2 people who have stuck to their words. Everyone else who at some point said something negative, something horrible, terrible, or spoke ill of the cryptocurrency space. Not that Tepco has. It's more of a every major company is in the space in some sort of way now. That's why I think it shocked so many people when we saw the end of the beginning of the end of FTX and how many companies were associated with them. Do you remember that 2-week period where we had about 45 different companies coming forward being like, these companies had nothing to do with crypto, but they all had exposure to FTX in some sort of way? All these companies know that if they don't get in now, rather, this is probably the best time for them to get in before prices go back up. And therefore, yeah. So, unsurprising, there were a number of other countries as well, which doesn't even make popular. It's the weirdest thing. So much news years ago would have made extremely popular news and people would have been more bullish on it. When you hear that every company, every institution, like 15 governments are into Bitcoin, they're mining it, they're buying it, they're holding it, I assumed that normal news would have had a profound effect on the cryptocurrency space and the movements of the market. But alas, it's only the stock market that seems to be doing it because no one else seems to be paying attention to the fact that all these, like there's barely enough Bitcoin to go around. And then you have news that all these companies are mining Bitcoin. What do you think they're doing with the Bitcoin? Do you think they're just immediately, if you mine 100 Bitcoin, do you think they're selling off that 100 Bitcoin? Or do you think they're mining it to keep it with their excess energy that's free for them? Right. So eventually, once again, the rich people will own all the assets. They will own all the Bitcoin. They will own all the crypto. And that's just how it keeps going because that just seems to be the general trend of where the universe is going. That's the Tepco. Japan's biggest power provider is going to be mining Bitcoin. Yeah. Let's move on. Also in news, blockchain scaling solution Polygon is apparently gearing up for a hard fork that aims to boost the chain's performance and make it more efficient. In a new blog post, the Polygon team says that while the project has achieved many of its targets for scaling Ethereum, they've done a very good job. More immediate goals now require the network's approval before becoming a reality. According to the team, the new hard fork boils down to 2 main points: to reduce the severity of gas fee spikes and to address chain reorganization in order to decrease time to finality. The team says reorgs happen when a validator node receives a new information that shows a longer or higher version of the chain. Of course, that makes sense. As a result, the old chain is discarded to make room for the new one. There's no timeline here as far as I can tell. All it says is, the things that they plan on doing, raising or lowering the gas fee to 6.25 from 12.5. and a whole bunch of other stuff, but there's no date for this. I assume it will be big. Once again, Polygon is one of the main things that I think actually helped, and I'm going to use the term lightly here, saved Ethereum, because for those of you who don't remember, at some point there were people with like $300 Ethereum transaction fees. And remember when people were trying to mint those Bored Ape Yacht Club, I think the Metaverse land or something like that, and people were paying. There was one person who allegedly said that he paid, I think, $3,000 3 times and still didn't get any land. A number of other people were also talking about they had a $1,800 transaction fee as well. So, $1,800, 1 cent. $9,000, 1 cent. You can't really compare the two at all. So if Polygon just gets better than it already is, I will keep on using it because it just seems like the thing right now. That's the Polygon hard fork is apparently happening. No date. News. Yeah. Let's move on. Also in the news, the world's largest cryptocurrency exchange has continued to burn their token known as Binance Coin or BNB. To do so, the company announced the 22nd, it's 22nd already? Oh my gosh, time is flying by. I remember the first time they did this and people lost their ever-loving minds. Binance basically created around 200 million Binance Coin tokens. They announced that they would burn until, I believe, they only have 100 million, but I think that might have also changed. I think they might just continue burning in general. I'm not 1,000% sure, but I feel like I was reading that news somewhere. They burned $620 million worth of Binance coin. This is why we heard years ago, a lot of people were talking about Binance as like the Amazon or the Google of the cryptocurrency space, i.e. if you buy one of their tokens or have some of their tokens, the price, air quotes, would only go up as they continue to burn all their coins and the coin has more utility and more use cases, and you kind of continue to name all the other things there. It says 2.6 million Binance coin burned, 22nd quarterly burn. Absolutely insane. Are we not there yet? Should we not be more than halfway to, the end of all these burns? I don't know, but this is always popular news. I think anytime that like coins leave circulation, people always end up talking about it a lot. This is why we always hear Shiba Inu, Terra Luna Classic, Binance, the quarterly burn, because they used to do it more frequently. But is like, you can't do this every single day, so just have it, every couple of months. Yeah, that's the Binance news. And yeah, let's move on. Also in the news, Cardano's builder, Input Output, has announced the release of the latest version of the Daedalus wallet with several improvements. In a tweet, IOG announced that Daedalus 5.2.0 for mainnet was now live. There's the tweet for it right there. The Daedalus 5.2.0 mainnet release supports Cardano's node version 1.35.4 and Cardano wallet version, that's a lot of numbers. No. This release also updates the Project Catalyst API URL to point to a new URL. Additionally, the update adds Byron's wallet tracking capability and aggregates similar RAM sizes for easier data analysis. Cardano's first era on its roadmap, the Byron era, saw the delivery of the Daedalus wallet, IOHK's official desktop wallet for ADA, as well as Yoroi, YOROI, a light wallet for IOHK sister company Emergo, designed for quick transactions and day-to-day use. Wonderful. So there's a new wallet. I guess it's working because typically an hour after any new wallet, I don't care what coin it's from, if it's from EOS, if it's from Tron, whatever it is, if it doesn't work within the first hour, everyone knows, and then they have to like roll it back and they have to do something new. So I guess this one worked out, as we've heard, no complaints. That's the Cardano has a brand new version of their Daedalus wallet 5.2.0. And yeah, let's move on. Also in the news, the number of Ethereum addresses holding more than 0 as their balance, really? Okay, has hit a new record high on Monday of 92.5 million wallets now holding Ether. 2022's bear market. It's weird to read out 2022 because it still feels like last year. It doesn't feel like we're in a whole nother year. Anyway, 2022's bear market, which culminated in the collapse of one of the world's former largest cryptocurrency exchanges in November, does not appear to have impacted growth in the number of non-zero balance addresses. There's a chart right there. I assume this blue line is the wallet addresses. Some analysts view the number of Ethereum addresses holding a non-zero balance as a proxy for the second largest cryptocurrency by market cap's broader adoption. Viewed through the lens, they continued, seemingly unstoppable rise of number of non-zero balance addresses can be interpreted as a long-term bullish sign for the Ethereum community. We had news similar to this a couple of months ago when it came to Bitcoin as well, and I think maybe for XRP, I'm not really sure. What one of the basic metrics is, or the idea was a couple of years ago. This was years ago. I think it was estimated that we had roughly anywhere between 50 to 100 million people who were currently into the cryptocurrency market, like the entirety of crypto. So then when you hear that one coin alone has 92.5 million addresses that actually are holding Ether inside of them, This leads us to the story and the topic of us eventually having over 1 billion people in the market. At that point, people believe that Bitcoin's value would be over $500,000 simply because of all the people who are in the market and all the money that's actually moving around. There's also other metrics popping up for Ethereum quite recently as well regarding staking. We heard some about a week or two ago about how much is being staked, who's staking, who's planning on staking, all the getting ready for the March upgrade as well for the Shanghai update. A lot going on. It's nice to see normal news back in the news once again. I was dramatically and still am fatigued. Everything Sam Bankman-Fried. So to now see that like we're once again getting nothing but good news back in the market all over again, it's quite nice because eventually at some point it has to have a positive effect on the cryptocurrency market. We can't just get good news every single day and the market not move, right? That's the Ethereum, 92.5 million addresses holding Ether now. And yeah, let's move on. Also, when like this was more popular than I assumed it was ever going to be. Twitter recently added 30 more tokens to their crypto price index or their $ cash tags feature. The cash tag service allows users to check the price of individual cryptocurrencies. The users need only type in the name of the cryptocurrency to check its price. Twitter started this feature back in... Really? That's weird. It said Twitter started this feature in 2012, but added cryptocurrencies on the... Okay. Twitter added this feature in 2012. I assume that was for other financial instruments, but added cryptocurrencies on the 21st of December of last year. That makes I was like, what? The social media platform's users already applauding this decision by Twitter. A lot of people lost their minds over this. Basically because these coins are now supported by Twitter for the price index. It's, of course, Bitcoin, Ethereum, XRP, Dogecoin, Litecoin, Binance's US dollar, Solana, ADA, DAI, Avalanche, Uniswap, Shiba Inu, Binance Coin, US dollar coin, OKD coin, something called Lido, LIDO, Polkadot, Tron, Bitcoin. Wow, almost said something terrible. Bitcoin Cash, Stellar Lumens, Mana, and Sandbox. The platform's new CEO, Elon Musk, is a staunch supporter of Dogecoin. Sure, why not? Here's a tweet for it right here. It says Twitter has added the Doge cash tag. So basically you just put the $ and then the name of the coin and then the price comes up. It says, thank you, Elon and Twitter engineers. I think this was bound to happen, but sure, why not? As seen above, one of the new users shared the excitement and gratitude for adding Doge to the cash tags. A new addition will make access to crucial information about a cryptocurrency like its price accessible. TradingView enables the price information on the platform within the cash tags feature. I think people were mainly excited that their coins were chosen. Could it be that people are maybe using this as a reference to what coins might futurely, not a word, be supported by Twitter, as we've had rumors for a while that Twitter is going to be adding coins to the platform or something on their platform or something Twitter-esque is going to be happening. This was popular mainly, not joking, because they added XRP, Dogecoin, and Shiba Inu. These were the top news stories surrounding Twitter adding the crypto price index feature. I assume they go through their metrics and they see that tons of people are into cryptocurrencies and are, talking about it all the time. Like you can usually, we went over that before. You can usually see on a social media's platform how much someone is talking about a coin. We had news a week ago that part of the reason why, I believe it was Santiment, I don't know, was talking about why prices were going up. It's because basically we were at the point where 1 in 6 or 1 out of every 8 people was talking about Bitcoin exclusively on social media. And they said historically, once we get to 1/5, this is normally when we have a bull run. So I assume the amount of people talking about crypto more as Bitcoin has risen by $4,000 cause more people to talk about crypto, and therefore, it's the circle of crypto life. That's the Twitter has added cash tags. Oh, I'm so stupid. It's hashtags, but for cash. Wow, good job. Cash tags for 40 coins. I don't know how many that is. And people were excited about Dogecoin, Shiba Inu, and ZERP. Yeah. Let's move on. Also, in part of the news, OKX cryptocurrency exchange apparently has $7.5 billion in their reserves. And these reserves do not contain its native token, according to a proof of reserves published by the exchange on Thursday. This is the third pool of reserves OKX has published, but is the first to show the exact breakdown of assets. Here's the tweet. This is it's a screenshot of their actual website. They have 105% of the Bitcoin that they said that they have. They have 105% of the Ethereum reserve, and they have 101% of the Tether as well. The report shows that the exchange is over-collateralized with a reserve ratio of 105% for Bitcoin, 105 for Ether, and 101 for Tether. OKX publishing the exact asset mix comes as a response to a crypto quant developing a metric to measure the cleanliness of reserves. What? Crypto quant defines this as how reliant an exchange is on its native token. In what? Okay. Crypto quant's data shows that OKX's reserves are 100% clean. Binance is 87% clean. I don't know what that even means. Bitfinex is 70% clean, and Huobi is 60% clean. Okay. He said, I personally think everyone will learn a ton over the next 6 months to a year. We will all stress test each other's proof of reserves, hopefully in a constructive way. This was said by OKX Chief Marketing Officer. We're all going to learn from each other and ask the hard questions. Hopefully most venues have good intentions. I'm shocked because we heard last year that every crypto exchange was talking about in a week doing their own proof of reserves, basically showing that they weren't insolvent, that they did have the money, that they weren't simply announcing that they had or were in possession of 30,000 Bitcoin, but they actually had the 30,000 Bitcoin just in case everyone took their Bitcoin off of the actual exchanges. So we haven't heard a lot in a while from any other crypto exchange. I think at the moment it's just been Binance. I think there was one other one in Europe, but they're a relatively small exchange, so no one was like, woo! And now we have OKX also doing the exact same thing. So cool. It's nice to know that no one's been lying because it's been way too long discussing this from the beginning, from the get-go. Every crypto exchange should have told everyone exactly how much money they had on their order books. And this should also be quite transparent for everyone because you're holding our money. So therefore, we need to know if you actually have it. That's the OKX. Apparently is over-collateralized and has more money than they even told us they did. Cool. Wonderful. Let's move on. I don't know what this is supposed to be, but sure, why not? The world's first automotive project on the Cardano blockchain was unveiled at Davos. The e-tuk-tuk? Tuk-tuk. I'll say tuk-tuk. E-tuk-tuk, that is E-T-U-K project, announced that it will begin operating in Sri Lanka with the support of the local government. Present for the Cardano Foundation was CEO Frederick Gregard and Global Head of Marketing David Taylor. While numerous attempts to convert the tuk-tuk to an electric operation have failed in the past due to a lack of sufficient charging infrastructure, e-tuk-tuk aims to overcome this hurdle by creating a peer-to-peer economy using the Cardano blockchain. I'm tired of saying that word. E-tuk-tuk plans to address the lack of charging infrastructure and the high cost of e-vehicles in developing countries by building a dynamic, multifaceted revenue model. In doing so, the peer-to-peer economy is intended to incentivize the expansion of the highly scalable network of charging stations and their tuk-tuk owned e-vehicles via the Cardano blockchain. So I assume this is trying to electrify itself, electronic vehicle itself, and it appears that they're going to be doing this using the Cardano blockchain. Okay. I don't know if that's simply like recording information from where the cars are. Like, is it meant to be like a tracker to see where they were, who they picked up through an app or something like that? It makes no mention of them actually utilizing the ADA token, but maybe we'll hear more about this in the future. It doesn't really say anything. It talks about fossil fuels and wanting to use a more environmentally friendly blockchain. Yeah, it says they're working with the government, and apparently, yeah, they're trying to EV them, but they'll be using Cardano as their blockchain for it. Wonderful. That's the Cardano project unveiled in Davos about e-tuk-tuks. News? Right, yeah, okay. Let's move on. Yep. I do hope that you've all enjoyed. I do hope that you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. Hope it's absolutely fantastic. Thank you all once again for watching, listening, commenting, subscribing, and or supporting. And I will most certainly be talking to you all soon. See you.